As we mentioned, the Bank of Canada is holding its key rate at 2.25% as its final decision of the year, a move that was widely expected by economists. Let's go to Charles St-Arnaud. He's chief economist at Servus Credit Union to talk about the move. Thanks for joining us today.
Good afternoon.
So the bank says this is the right spot to keep both inflation in check, but at least provide some support to the economy. Do you agree?
Yeah, well, I think from what we've seen in terms of where the economy is that we've seen over the past few months that the economy is in a place where it's no longer deteriorating, but it's not necessarily rebounding rapidly. Yes, recent indicators have been strong, and the Bank of Canada alluded to that, but you can see the central bank didn't want to put too much emphasis on the strong number. For example, like the growth in the third quarter was really much driven by a decline in imports, while domestic demand remains mostly flat. And yes, we have had also very strong labor market growth, but I feel, or labor market gains, but I think the Bank of Canada is also a bit concerned that the numbers have been very volatile and a bit of kind of diverge from what businesses have been saying in terms of what are their hiring intentions. So we could have some little payback there in the coming months. So the bank wants to be a bit careful not to get overly optimistic about the outlook.
Okay, the governor was asked today about where the resiliency in the economy has come from, and he responded that the economy was in fact stronger than believed heading into the year. Do you think it was?
Well, and that's what the revision to the growth number that came out a couple of weeks ago from Statistics Canada is showing is that we've had stronger growth going into 2025. We also had better productivity gain than what we had thought going into 2025. So both are kind of suggested that the economy was slightly stronger than expected. I think also we have to take into account that the amount of tariffs that are submitted on exports from Canada remains relatively low. Yes, they are really have a big impact on specific sectors, especially steel, aluminium, car, and all that. But generally, for the Canadian trade sector, it hasn't been as bad as what we would have expected earlier this year.
Okay, so the bank expects weak growth for the fourth quarter of the year. Is that mostly based on weaker exports then?
Well, it's based on the fact that we don't see a strong rebound in domestic demand, and we continue to see a lot of volatility in the external sector. So as I've mentioned, the third quarter growth was basically entirely driven by a drop in imports. So we'll have to see that might be corrected in the fourth quarter. We might also be seeing a more modest increase in exports. So that's where a lot of the uncertainty is coming for the economic outlook.
Okay, let's talk about 2026. Do you expect that same theme of volatility to play out?
Well, it will be volatility, but also continued uncertainty. There's still a lot of risk on the horizon. The tariff situation with the U.S. is not going away. We also have the renegotiation of the CUSMA agreement next summer that also brings another layer of uncertainty, especially that without the CUSMA exemption, the effective tariffs on Canadian exports would be much higher than what we have right now, and the impact on the economy would be significant.
Okay, so let's talk about that a little bit more. What would the fallout look like if, for example, as Donald Trump has raised the possibility of putting that trade agreement aside, not negotiating it, and perhaps going to bilateral agreements? And we don't know if that would happen even right away.
Yeah, well, the big question is what part of Canada's trade with the U.S. remains tariff-free, and what will be ultimately the effective tariff rate that Canada will have to face? Because one thing for sure is that following the renegotiation of CUSMA, there will still be some tariffs on Canadian exports to the U.S. The question will be by how much. The risk is really, could the U.S. decide suddenly that no, we no longer want to go to CUSMA, or we go to much higher trade or to higher tariffs on various goods, on various Canadian goods, and that could be very negative for the Canadian economy.
As an offset, could we start to see the effects of government spending next year? We know there's a push towards major infrastructure projects across the country. Could that offset some of the weakness we could see from exports?
It could offset, but only partially. The link from exports is such a big share of our economy, and especially exports to the US. It's about 25% of Canadian GDP that is linked to exports to the US. So you'll need really strong government spending to compensate that. And actually, I don't think our public finances would be able to support that. So, and that's where it's really important that we can help and mitigate some, but not all of the negative shock that could happen if we start to see much higher tariffs from the U.S.
Yeah, so it's another sort of stay tuned to see what Donald Trump wants to do for 2026. Charles St-Arnaud, thank you for joining us. Appreciate your time, sir.
Thank you for having me.